Robust, that's how Exxaro has described its half-year performance. For the 6 months to end June, headline earnings per share rose 13%. The group says operational and marketing efficiency helped it weather a challenging macroeconomic environment and ongoing logistics constraints. An interim dividend of R8.43 has been declared. This is up 6% on the previous period's payout. It also marks the 45th consecutive declaration for the group since its listing on the JSE 19 years ago. The firm says this is a clear testament to the strength of Exxaro's business model. Spur has reported another year of growth. The owner of Panarottis and John Dory's has posted a near 17% rise in a full-year headline earnings per share. That's thanks to stronger restaurant sales and an expanding footprint both at home and abroad. A final dividend of R1.93 has been declared. This lifts the full-year payout by just over 40% to R2.99. Spur says it remains confident about the long-term growth opportunities across its restaurant portfolio, but it has noted that the pressure on household budgets will keep trading conditions challenging in the near term. Blue Label Telecoms expects to report sharply higher annual earnings. The prepaid specialist has forecast a surge in full-year headline earnings per share of as much as 521%, while earnings per share are projected to come in at least 279% higher. The trading statement gave no reason for the increases. Blue Label will open its books on the 27th of August. Naspers says efforts to unlock the value trapped in its portfolio outside Tencent are bearing fruit. According to a presentation made by CEO Fabrizio Bloisi during the group's AGM, the discount has been reduced from about 38% to 31% in the last year. This has created about 230 billion rands worth of value. WBHO has flagged higher year-end profit. The construction group expects its headline earnings per share to register a jump of up to 20%. WBHO says it achieved marginal growth in revenue for the financial year, but performed well by improving margins across most business units. Overall order book levels grew by 23% to nearly 38 billion rand, reinforcing its positive short to medium term outlook. The group said to present its results next month. PPC has sold a long-held piece of land in Zimbabwe. Its local subsidiary is disposing of Arlington Estate in a deal with $30 million. That's about 530 million rand. The land was seized by the state in 2010 and only returned to PPC late last year. PPC says the property has no role in its core cement operations. To wrap up the deal, approval from Zimbabwe's Reserve Bank is needed to declare a special dividend and repatriate the proceeds to South Africa. The buyer, a local property developer, plans to build a mixed-use hub. South Africa is pushing for easier access for its goods in Japan. President Ramaphosa says fairer trade terms are critical as African exporters face growing barriers in the U.S. Speaking at the Tokyo International Conference for African Development, Ramaphosa said uncertainty in the global trade order underscores the need for South Africa and its neighbors to diversify markets. He urged Japanese counterparts to support tariff cooperation to open doors for African goods. The move reflects Pretoria's shifting trade strategy in the wake of recent U.S. tariff actions. Further afield, McDonald's and its franchisees agreed to discount 8 popular combo meal offerings by 15% and offer $5 and $8 specials as restaurants look to attract diners worn down by economic woes. Here's more detail in this package report.
McDonald's is cutting prices in the US as consumers rein in spending. That was according to the Wall Street Journal. The news follows weeks of discussions with restaurant operators concerned about the change. It reportedly sees the company offer financial support to franchisees if they agree to drop prices. The move is meant to win back diners worn down by economic woes. McDonald's will now discount 8 popular combo meals by 15%, The Journal says it will also offer $5 breakfasts and $8 Big Mac and McNugget meal deals later this year. They will be marketed as extra value meals. The company declined to offer a comment on the report. McDonald's has already benefited from its existing affordable meal bundles. Earlier this month, they helped it beat Wall Street estimates for second quarter sales. Rivals including Domino's Pizza and Taco Bell owner Yum! Brands have also been doubling down on value meals. The fast food industry has been battling to counter a slowdown in demand, mainly among lower-income families.
Meanwhile, Sony will raise prices of its PlayStation 5 consoles in the United States by around $50 as the Japanese conglomerate navigates a slow recovery in the video game market, while U.S. tariffs threaten to raise costs.
Sony's PlayStation 5 is about to get more expensive in the US. Gamers will have to pay around an extra $50 for the device. The Japanese firm is dealing with a slow recovery in the video game market, while US tariffs threaten to raise costs. Sony said all three PlayStation 5 consoles will see a similar price hike. The most expensive PS5 Pro version is expected to cost just under $750. The price changes come after US President Donald Trump announced sweeping tariffs earlier this year. It targeted imports from global manufacturing hubs such as China and Japan. It's led to fears of supply chain disruptions and high material costs. Sony had raised prices of its consoles in various European markets in April. Rival Xbox also hiked sticker prices of its consoles and accessories in a number of regions a month later.